Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, and to my subscribers and to Twitter. How you guys doing? All right, so here's the market update. It's been a long time, and the reason that it's been a long time is because it's the summertime. Okay, there's a lot of things that are correcting. There's no clear direction as to what's going on. So there's a time to trade and a time not to trade, right? And this has been a time not to trade, even though the market is going higher. Now you're saying to yourself, "Oh, look at this nice big move. It's up, 10%, whatever it is. That's great time." Well, in a bear market, you get these bear market rallies. You don't want to be chasing, and that's what's going on here. That the market is going to behave in such a manner to make you believe that, oh, the bottom is in, right? So you got a camp of people saying, oh, the bottom is in. Look, the market is going higher. Blah blah blah. Then they have another camp that says, oh, recession, 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 recession. So, who do you believe? Well, it depends what your vague hunches and feelings are telling you. As far as I'm concerned, my feelings and vague hunches are telling me that nothing has changed. It's still lower highs and lower lows. Period. End of story. We're still in the bear market, and it's just that simple. All right. Now, we're coming up to the resistance area, as you guys would say it. Uh, so, this is potentially a key area, okay? A key area of reversal in the stock market. So be really careful. If you had some long positions, start reducing, okay? Uh, you had a falling wedge that corrected. It had to correct. It always does. Okay, so you have this falling wedge here, and then it started to correct. Falling wedge here when it started to correct, and you gotta get used to it. This is not the bull market that you guys were used to for the last 12 years. It's not. It's a different kind of market. Can I be wrong? Can this break out and start going, to wherever it's got to go? Sure, but from an economic perspective, I don't see that as being likely. Well, well, jobs number was good today. 528,000 jobs. Woohoo! The bottom is in. No, 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 no. What that says is that we're not in a recession. That's what that means. Okay, we're not in a recession. If you follow me on Twitter, you'll know that I'm so anti-recession all over the place. Doesn't mean we can't go into a recession at some point in the future, but to be running around and just saying recession, 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 you know, it's just clickbait. It's just people looking for followers, selling cute stories, because there's nothing fundamentally that's showing uh, that we're in a recession. Now, having said that, there's some economic indicators that are going to show as if we, under normal circumstances, we would be going into a recession, given the way the charts look year over year and so forth. Okay, it would appear that way. But remember, we went from lockdown, right, the drop, then we got the pop, okay, and then we got the correction, the reality. It comes back to a normal kind of economy. But that drop and pop and then normality, the indicators that we use are not designed to accurately reflect what's going on in the economy. It's kind of like I've said it before. It's kind of like having a seismic uh, earthquake indicator, right? And then you jump out of an airplane. It's like, oh my God, we have an earthquake. Look at this, and it's going all over the place. It cannot register. It's not designed for that. It's got to be, in a nice stable place. Uh, so what they're doing, these experts, as I call them, the recession experts, is they're using these chart fuckeries, as I call them, and present it to you as if, well, we're going in a recession. We're already in a recession, and then you get this jobs number of 528,000 jobs. That's not a recession, okay? So kind of keep that in mind, all right? And again, I'm going to emphasize. I know a lot of you guys that you love the charts, and that's great, but you got to have something to contrast it with. And I remember prior to all of this, when the market was going straight up, and everybody's like, "Woohoo! It's over. COVID is over. Everything is great, right? Going to new all-time highs. Buy the dip. Blah blah blah." And then they got smacked in the mouth. They got smacked in the mouth. Why? Because it didn't understand the economics of it all. And what they were telling me back then was like, "Well, Nick, come on, buddy. The stock market doesn't care about the economy." Well, do they care now? Of course they do, right? So they were saying nonsense. They were talking nonsense, and unfortunately, the buy the dippers got spanked. They got spanked. Anyway, so we're coming up to a resistance. All right. So we'll get into cryptos now because I know that's what you guys love. So let's get into cryptos. Total market cap. All right. Bear flag. There's a little mini bull flag in here if you want to take it to the upside for a little bit, whatever. But generally speaking, right here, this is a bear flag. All right. Now it has broken out. Can it run all the way up here to about 32,000? Yes, it can. Uh, but you're still in a bearish structure for now. Okay, 1 to 3 up. It's identified. Remember, when the market, when the price action is going up, the next move is going to be down. That's what markets do. They deke, right? Same thing here, right? It's going down. You get a structure that's going up. What's the next move? Down. All right. Simple. It's not complicated. Same thing back here, right? You see this? Which way is it pointing? Up. What's the next move? Down. All right. And that's what I tell my subscribers. If I can't point to it and I cannot show it to you in real time, then don't listen to me. Don't. You're wasting your time. I don't know what I'm talking about. But when I can point to it and you can see it in real time, well, I'm on to something, right? At least. Ethereum, right? Same thing. Bear flag. Although this is a little bit more funky, uh, nonetheless, it is a bear flag, right? This one actually looks a little bit stronger than Bitcoin, just a tad, right? But nonetheless, it is a bear flag, right? I would even say this is a little wedgie formation within the bear flag that's signaling more downside. All right, so that's the crypto analysis. All right, don't get too excited about cryptos. Now, remember, uh, back in June, everybody was bear shitting. It was great. I had a lot of fun with this one. Everybody was just bear shitting, and they were like, "Oh my God, cryptos are going, or Bitcoin is going to 6,000. It's going to zero. It's crap." And I'm like, "Okay." I told subscribers, and if you follow me on Twitter, I posted. I told the subscribers, I'm like, "Hey, you want to be buying it below 18.5?" And a lot of people were like, "Well, I'm not buying that. It's a falling life. I'm not. That's dangerous." You know, I'm like, "Well, you got to buy." Because the risk reward was so beautiful. It was gorgeous. Because if I was wrong and you bought below 18.5, which is right about here, okay, what's your risk? That's your risk right down here. Okay. What if I'm right? Well, this is your reward. Okay. Look at that reward. It's huge. It's beautiful. That's the kind of trade you want to be making. So how did I know? Well, didn't know. How did I know it was likely to break out? Well, you had a 1, 2, 3 move to the downside. Okay, you can see it. Which way is the structure going? Down. It's a wedge. What's the next likely move? Up. Up. That's the next likely move. And what happened? It went up. Well, magic. Okay, so again, everybody was bear shitting. Oh, you should have seen Twitter. Everybody was like, oh, let me get my dibs in. And they were all wrong, comically wrong. Now I'm telling you that more likely than not, at some point, this bear flag is going to break. Is it going to break now? No, that's not what I'm saying. But at some point, this is going to break. All right. But that's how I knew that knew. I keep saying new, but anyway, well, after the fact, I can say I knew. During it, I didn't know. Uh, but this is how I analyze the risk reward. Okay, it's a wedgie formation. Wedgie formations tend to correct at some point, and that's what they did. Now let's talk about some of my trades. Okay, first of all, you look at the Pakistani, okay, rupee, kaboom, easy little trade here. Take a look at the Indian rupee, although I shouldn't have made it a monthly. They tell me because it doesn't have the aesthetics. It looks like it's a monthly chart. Next time I'll do like a minute chart or something. I don't know, but I gotta make it. I gotta sensationalize it more. But anyway, nonetheless, Indian rupee dropped. Okay, same thing with Pakistani. Right. Um, you're not supposed to see this one. Anyway, it doesn't matter. Business loans uh, divided by money supply. Okay, look, every time we had a recession, the business loans were at the upper end of this falling wedge, not at the bottom. Okay, it's starting to move up a little bit, but we're nowhere near where we need to be to say, you know what, this looks a little bit bearish. It's not the holy grail of analysis, but it would be nice to see this a little bit higher. Okay. Um, Forget about this one. Okay. Take a look at this one. Okay. We're rapidly heading for a recession signal, not a recession signal, right? Uh, and sure enough, that's exactly what happened. The yield curve has inverted. That is a bad signal. It's a recessionary signal, but it doesn't mean that it's going to happen like a light switch. It's not a light switch. Okay. You need time with an inverted yield curve, just like we had before. Okay, 2019, 2007, you need a time with a flat to inverted yield curve. All right, and that's why again, keyword is signal. Good. All right. So that's about it for this video. I don't want to say too much. Again, it's a summertime. There's a lot of corrections that are going on in the markets, and again, I don't want to, you know, uh, I don't want to put myself out on the limb because I honestly I don't know what's coming next. I don't. Uh, and again, why make a video when I don't have anything really to say? Now I do because we're up against that resistance area. We do have a bear flag in cryptos. Um, where is it? Okay, we're up against this resistance area. You know, you want to lighten up here. Okay, if you're long. Um, but yeah, other than that, it's summertime trading. Relax. We're still in the bear market. Let's observe. I don't want to create self-importance. Okay. I want to try to be as accurate as possible. And the more I say, the more I put myself out there. And yeah, no need for videos. All right. So that's about it. All right, guys. Thank you again for all your support. Really appreciate it. I'm really going to try to do the absolute best to give you the best analysis I can. All right, the honest analysis. We're not in a recession. We're in a stagflation. What does that mean? It means that the economy is not growing. Okay, it's flattish. Okay, and it means we have inflation. That's the accurate description of what's going on right now. The correct understanding is that we are in stagflation. We printed up $10 trillion in a few years. 10 trillion. It took us 200 years to get to 10 trillion. Okay, 200 years it took us. And we printed that in just a couple years. And how much economic growth did we get out of that? About 500 billion. Okay. From 19.3 in 2019, and this is real GDP, okay, inflation adjusted, 19.3, and we went to 19.8. Whoop de fucking do. Right? So we've spent $10 trillion to get 500 billion of real economic growth. It's laughable. Okay, and then everybody runs around and is like, oh my God, we have inflation. Well, don't worry about it. It's transitory. Well, not really. Well, of course not really. You can't print that much money and, and not get inflation because you're not going to get economic growth. You couldn't get it in 2019, right? And that should prove to you, that just the act of printing money is not going to create economic growth. Imagine all the money in the world. Add a bunch of zeros to it. Is that going to make the economic pie bigger? No. It's just going to be dollar bills with more zeros on it. That's it. You can't. Government cannot print value for a currency. Can add zeros. Okay, great. So what? You're not going to get more economic growth. You can't print blood, sweat, tear, innovation, and risk taken. You can't do it. So, that kind of debunks MMT, right? So anyway, we're coming up to a key area. Be careful. We're still in a bear market. Lower highs, lower lows. Moves like this are only there to provoke emotion. Okay, and if I'm wrong, then so be it. I'll cross the line and I'll give us some kind of bullish structure, and I'll come back here and I'll be like, hey, it's bullish. But again, to do that, you're going to need a whole lot more fiscal policies, more deficits, okay, more zero interest rate policy, more QE. We don't have that now. We don't have it. All right. That's it. Thank you very much. Take care, guys. Be careful out there. Enjoy the rest of the summer, and I'll talk to you soon. Bye-bye.